Aron, how's the current investment environment or economic environment affecting the value of businesses, both large and small? I mean, what are you seeing?
We're hearing from our portfolio managers that actually select the underlying stocks that they're still able to find some good value out there, especially in the quality names.
Okay.
The rally so much has been more towards the junkier, smaller stocks, and so people have left behind kind of those, not necessarily only large, but just the quality, good balance sheet type names.
So you might recommend jumping into some of these blue chips, as we call it.
Yeah, I think it's a good place.
That's
to
a little
look.
ahead. That's in our next segment. We'll get you started on that.
You bet.
Hey, now, Tony, all the central banks have been, except for our own Federal Reserve, raising rates, and boy, that's put downward pressure on the dollar. I mean, is the Fed ahead, behind? Well, they're behind in terms of raising rates. What's going on?
Well, they're clearly, I think the Fed is investing in cheaper dollars. I think it's a cheaper dollar strategy. We've talked about this. I think that the underlying strategy is to devalue the dollar as much as possible so that we can pay back some of our debt in cheaper dollars. And I think even more specifically, it is the way to force China to increase the value of the yen.
And here, Bernanke, head of the Federal Reserve, says, we're responsible for pushing up the stock market, but not for those commodity prices.
Right.
No, Mr. Bernanke, you don't get to pick and choose. You either got both of them or you got neither of them. Aron, how's this Fed action affecting investments? I mean, in other words, moving in or out of what investments?
Well, certainly you have to be very careful on your fixed income investments. You certainly want to
bonds, folks. I think
shorten your durations. Look at shorter term bonds. Just know that interest rates will go up eventually. It's one of those things. It's not if, it's when will it happen.
So CDs you don't see as long-term. Money market funds?
Certainly not. No, certainly those are necessary evils for your short-term money that you're going to plan on spending. But that's beyond that. You hold it longer than that, you're going to go backwards after inflation.
Tony, what are you doing with your portfolio? I know you don't really like to make recommendations on a micro level, but a macro level, you usually.
I think. What
is the Fed doing to you?
I think you're going to have to start hedging inflation. Hard asset kinds of backed businesses certainly steer away from those that are commodity driven for their inputs and really
for inputs.
Yeah,
in other words, a food processor, for example, where your costs are going up dramatically.
Absolutely, you need to be concerned about that. I mean, some of the ag sector looks very promising right now as the commodity prices continue to rise.
ADM came out with they beat estimates and the stock dropped to $1.65 this morning. I'm like, what's going on?
Well, I think there's also some concern on the other end. Is the ag sector's both inputs and outputs on the commodity. I mean, you have fuel prices that are really affecting those inputs, and of course the price of land is going up. I mean, we're seeing. I'm surprised at how much inflation I see going on in our economy, regardless of what the actual numbers tell. I see a lot more demand for these assets than what we see supply, and I think we're going to have really big inflation down the road.
Okay, that brings me, Aron.
I would say, though, if you're a borrower, you take advantage. You
borrow now.
Long
hey, if that door is open, I'm borrowing.
That's right.
Well, now, Aron, fixed inputs, fixed income assets like how about municipal bonds? I mean, we've seen a lot of criticism. Now, stay away from those as well. I mean, those could get hit with inflation, but also get hit with bankruptcy or default.
It's possible.
You think that's
oversold?
I
think it's highly unlikely. Okay. I mean, most municipalities are going to have to balance or bring their budgets within balance. They don't have the unlimited checkbook that at the federal level that they have. With the Fed creating money, basically. So you're going to see continued layoffs, I think, in the municipal sector.
So they're going to adjust their hiring, which brings me to that point, Tony. We have business graduates. Do they need to look outside of government for jobs, or what?
Well, our business graduates, at least here at Creighton, are doing extremely well.
Of course, they're
the placement of them
much above average.
Yeah. Well, Aron's a perfect example of that. So. But I think the market, the unemployment market is still going up. I think unemployment is going to continue to be where it is, maybe even creep a little bit higher. But the market segmented itself for people with skills. The demand for people with skills, college graduates with really applicable skills, is heating up. And where you're seeing the unemployment is in unskilled labor.
Folks out there, right now, we're talking about the unemployment rate for college graduates about 4.4%. For the high school dropout, 4 times that, 18, 19%. You're absolutely right, Tony. It is a tough time out there right now for those who chose not to continue with your education or cut off their education. So we're seeing that. Certainly, it's a tough time.
I mean, that'll take a long time and some decisions made by people to get retrained, and unfortunately, there'll be some that just get left behind. I mean, how do you force folks to take action?
Yeah, I mean, and it's not just getting that degree; it's also retraining. In other words, coming back. I mean, the programs we offer in continuing education, Tony. I mean, this is.
Ernie, what are you seeing in your portfolio relative? What are you doing?
Oh, I'm taking Aron's advice. I'm staying away from fixed income, or bonds, but I've been staying away from them much too long. In other words, I was either wrong or way ahead. I don't know which. I was way too early because I've been thinking interest rates had to go up, but Bernanke didn't call me when he launched QE2. So yeah,
that's right.
Yeah.